welcome back. This is Gozzyacctutors Accounting Academy. In our lecture today, we are going to look at an example of computing or preparing an income statement based on marginal costing principles where there is a closing stock. The example we have here has to do with a company named Rocco Limited. They make a product which has a variable cost of 6 naira per unit, and they have a sales price of 10 naira per unit. At the beginning of January 2025, there were no opening stock, and the production during the month were 20,000 units. Now, the production and distribution overhead amounted to 45,000 naira. There were no marketing costs or even variable marketing costs. No. Now, you are required to calculate the contribution and profit for January 2025 using marginal costing principles. If sales amounted to 15,000 units. Now, if you look at the solution we have there, we have to put our heading as Rocco Limited. That's the first thing to do. And then calculation of contribution and profit for January 2025. Now, the first item we have there is sales. How much do we have as our sales? We are told that a total of 15,000 units were sold, and we were given sales price. Sales price is 10 naira. So that means 15,000 times 10, and that gives us a total of 150,000 as sales value. Now, the next item is variable cost, because we were told that variable cost per unit amounts to 6 naira. So 20,000 units times 6 gives us 120,000 as variable cost. Now, the third item to consider is opening stock. During the period, the question says there was no opening stock. So our opening stock is 0. Now, what about closing stock? Recall that production, according to the figures we were given, amounts to 20,000, but sales amounts to 15,000. So that means that there was a closing stock, 20,000 minus 15,000, which gives us 5,000. And what's the value of this 5,000 units? The value will be 5,000 units times 6 naira per unit. Recall that valuation of valuation of closing stock should be based on variable cost only. So since variable cost is 6 naira per unit, we have 5,000 times 6, and that gives us a closing stock figure of 30,000, as you can see there as number 4. Now, what about marginal cost for the month? How do we get it? To get it, we have to add to the variable cost, total variable cost we have computed. We have to add opening stock value to it, and then deduct closing stock value to it to enable us get marginal cost of sales. And how do we do that? That means 120,000 plus 0, then minus 30,000, and this gives us 90,000 as marginal cost of sales for the period. So contribution for the period will now amount to sales 150,000 minus 90,000, and it gives us a contribution of 60,000. So that is the contribution. Now, to complete the income statement, we have to account for the fixed costs. So that brings us to point number 7. Fixed costs, that's fixed production and other fixed costs there. The amount, according to the question, 45,000. So if we remove it from the contribution, we now have point number 8, which is net profit of 15,000. So you can see the income statement here based on marginal costing principles, and here there is a closing stock. So, bye for now. This is Gozzyacctutors Accounting Academy. Remember to like our videos and to follow our channel. Until we see you next.